All right, option traders, it's that time again. It's time to look at the charts. You know, I make these videos almost every week and try to help out the trading community. It's all about the chart reading, technical analysis. If you're an options trader, you have to understand that the bottom line to you being profitable with your options trades is where the stock ends up going. Okay, there's no other way to make money in the options world unless you get the stock direction right, for the most part. Okay. Especially if you're holding on to these trades until expiration date. The stock has to move in the right direction. So how do you figure out, or how do you see what the stock is doing? By looking at the stock charts. If you're not looking at the stock charts, then you're missing out on a huge way to potentially up your profitability as an options trader. All right, so in these videos, like we typically do, we're going to look at the stock charts. We'll look at some of the indexes. I'll show you my indicators, support and resistance levels, chart patterns, all those things that I've been doing over the last 30 years to help me gauge which way a stock might be headed or not headed. Okay, that's what you have to do, and that will completely help your options trading game. If you're just trading options out of the blue without even looking at a stock chart, tell me how successful you've been. I know that I can't do it, and many people that come to me and ask for help say they don't look at stock charts, and it's a big reason why they're not successful. So sit back. We're going to go over the stock charts and just jump right in. All right, everyone. Lee Lowell here from smartoptionseller.com. Let's go to the charts and see what's been happening with the market and individual stocks, and kind of come up with a game plan for the week ahead. You got to put in the time. You got to do the research. You got to put in some effort. That's the only way to do it. That's how successful people are in all professions. You got to put in the work. So let's start with looking at the S&P 500 first. We look at the SPY, which is the exchange traded fund for the S&P 500. And for those of you that are new here, let me just show you what you're looking at. In front of you is my trading screen. Up here in this section is the price action of the charts. I look at daily charts. That's the way we do it. So this is a daily chart of the SPY going back about 2 years in time. And on the charts, we have these three moving averages. Here's a 200-day, we have a 50-day, and a 20-day moving average. All simple. Some people will use different numbers for their moving averages. Some will use like a 21-day moving average. Some will use a 30-day moving average. I use a 20, 50, and 200, all simple. And it just gives you an idea of which way the stock is trending, or the market in general. And I always say this, the trend is your friend. Stocks are going to be trending in a certain direction for a period of time until they move in another direction. What you want to do is get aboard the trend, because other than your quarterly earnings announcements with most companies don't have daily news that's going to make a stock gyrate. Every once in a while, you'll get these surprise announcements. But for the most part, most stocks will continue on in a trend until something major pushes it in the other direction. And also up here, what you'll see these blue lines. These are called channels. These are hand drawn, just as another visual to give you an idea of which way a stock is trending. And you can play the bounces and the rebounds, or the sell-offs from the tops and bottoms of the channels to give you an idea of when you should be timing your trades better. Okay, so if you're bullish on a stock like this, you want to wait until it's bouncing off the bottom edge of the channel. And if you're a shorter term trader and you want to get out of the trade, then you sell when it's bouncing off the top edge of the channel. That's what these channels do for you. Okay, and down here is the RSI indicator. It's the only other indicator I use. It's a 14-day look back period. It uses I use the 80 level and the 20 level to tell me when a stock or index may be getting a little overbought or a little oversold based on the price action up here. It just gives you a warning sign of when a stock may be getting ready to turn in the other direction. All right, so let's talk about what the market's been doing. Then we'll start to look at some individual stocks and we'll come up with a game plan here. So this is where the market ended on Friday, October 11th, 2024. All-time new highs yet again for the S&P 500. We've been talking about various times in the past. Here's a nice uptrend. We had some resistance here. Here's the line right here. That means it's resistance. It blasts up through the resistance again. And then we had this triple top area right here. We had one top, two top, three top. And the last time I made a video on this, we put the resistance line right here. Resistance line is just an area where a stock or index is having trouble getting through to get to that next level. Obviously, the overall market has blasted through in the last few weeks and is making more all-time new highs. And you can see the moving averages are upsloping. All three of these are upsloping. That's a good indicator. That means the stock is in a strong uptrend at the moment. When all three of these moving averages are upsloping, that means the bulls are in control. And even if we have a pullback to the moving average lines is a great area to get long again if you don't already have a position. So a stock that's in an uptrend typically will pull back to one of the moving averages, either the 20-day or 50-day. Coming down to the 200-day is really a big move. So it's really the 50-day and 20 days that will capture most of the pullbacks within the uptrend. And those are the areas where you can consider getting aboard the ride. Okay, so S&P 500 looking strong. We're in the strongest quarter of the year. October, November, December seasonally is very strong for stocks. I can't see the stock market doing anything else but going up to more all-time new highs going into the end of the year. There's really nothing out there that's really going to push this thing lower. We have the global news of wars going on in the Middle East, and there's always some other kind of news out there. You get that initial shock where you may have the down move for a day or two, but in the end, it's really the companies that are in the indexes that are going to drive the future movement of the market. The market will go up over time because the indexes are made up of these companies that are making products that are still profitable in the long run. So the stock charts have to go up in one direction. That's up. So when you get a pretty decent pullback, that is your opportunity to buy for the long run. Now, if you're a short-term trader and you're trading on 1 minute charts, this is a 1 minute chart. So each line here is 1 minute's worth of trading. If you're a high frequency trading, hyperactive trading, this is really hard to do. I don't do it. It's too hard for me. That's why I focus on the longer term trend. All right. So that's the S&P 500 looking good. I'm a bull. I'm always a bull, but especially into the end of the year, definitely a bull. For me, I recently bought, and what I'm always doing is either buying more shares of the SPY just to pad my long-term portfolios. Just recently, I bought some more down here around 567 because it was bouncing off the 20-day moving average, and it's just moved up since. So you have to have confidence in the trend lines and the market itself pulling back to one of these moving averages and then bouncing in. That's just the way I do it, and it works in the long run. All right, let's look at the NASDAQ. We use the triple Qs. This is the QQQ. You can see over here. Here's the symbol if I don't have it written on the chart. Has not reached all-time new highs yet, but here is the last all-time new highs in early July. As you can see, the market is, the NASDAQ is in this little upsloping channel here. So we can put a little, what you want to do is, here's the support area. It's moving higher. It wants to try to take out these all-time new highs back here. It's got the trends moving forward. All the moving averages are sloping upwards. I can only see the NASDAQ breaking the all-time new highs pretty soon, probably within the next 2 weeks or so. That's my guess, okay? That's the way I see it. Let's look at the Dow. We look at the diamonds. This is DIA. Here's a symbol up here, DIA. This is the exchange traded fund for the Dow Jones. Also, all-time new highs. And one other good thing is that if you see the little dash mark on the right side of the bar here, that tells you where the market closed on the day. If it closes near the highs of the day, that's a pretty good indicator that there's a lot of bullishness out there, that people are really clamoring to buy stocks if it closes on the high of the day. So we'll see if that'll carry over into Monday this week. So you can see here's a pattern that I drew. This is what's called an ascending triangle pattern, where the market is going up, 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 but it had this little area of resistance. But once it pops through that resistance, it should keep going. You can see here's the bottom edge of the channel, and you can see the 20-day moving average. So it had that little convergence right here between the bottom edge of the channel and the 20-day moving average, and it just popped from there. So over time, I've looked at hundreds and hundreds of thousands of charts over the years. These patterns repeat themselves. the markets keep moving in the same way because people are playing in the markets. People don't change. It's just how it is. And people's emotions and greed and all that and fear gets reflected in what the charts are showing. And the charts, the patterns just keep repeating themselves over and over again. So once you look at enough charts, you can see what's about to happen. All right, so let's start to look at some individual stocks. So I'll run through my list pretty quick here. On the right-hand side is here's just a smattering of stocks that I look at on a daily basis. And let's try to get a gauge of what we're seeing for these stocks here. All right, so let's start on my list here. We'll look at Microsoft. Microsoft is kind of floundering here. It's been sort of sideways since March of 2024. It was in an uptrend, and then it's just kind of been going sideways. Here's where it gets interesting. It's sitting right on support. Here's the 200-day moving average. It's converging with the 50-day moving average, and you can see the 20 days just starting to curl over a little bit towards the downside. So I would say Microsoft is in a make or break spot right here, whether it wants to try to bounce or go lower. So what you can also do is, this is what's called, a wedge pattern, a symmetrical triangle where you can see the price action starts to get tighter and tighter and tighter, and eventually it's going to blow out one way or the other. Right now, it's hanging on the bottom edge of this channel here. If the general market goes up and everybody else is, enthusiastic, it may give Microsoft a pop. But if there's some kind of bearishness that comes out next week, it could fall down and start to keep going down. So this is more of a wait and see mode for me for Microsoft. Now we'll look at some more of these popular stocks. I can't go through all of them, but let's just see what we have. Here's Nike, came out with their earnings recently, got knocked back down, but all the past earnings, it dropped, but then it starts to rally back up. So I'm thinking it's going to be the same thing. We've taken a position in Nike in one of our newsletters. We sold some put options here. What you can do is you can kind of see it's sort of in an uptrend here. We'll draw the line. We're hoping that Nike's just kind of go along this bottom edge here and continue to go higher. If you don't know what put selling is, let's go to our website real quick. smartoptionseller.com is our website. It's all about put selling. That is our main gig. That is what I do. That's what I've been doing for the last 30 years. To me, it's the greatest option trading strategy of all time. If you want to get a free ebook on what put selling is all about, go to our website, click on the free ebook. Here it is, Put Selling Basics, your free guide. Scroll down, you can put your name and email address in here. We'll send you an email back with a link to download the free ebook. That is our thing. Services tab up here. Here's some of our newsletters that we run. We have our coaching sessions. We have our probability calculator. And if you want to go in for a deeper dive on what put selling is all about, you can look at our video series right here. All right. So that is our website. That's what we have to offer. Let's go back to the charts here. So this is Nike. Let's go back to our list here, see what we can find. Oracle had great earnings a little while ago, early September. It just powered it higher, and it's a strong stock now. It's got support at the 20-day moving average. Oracle, great company, but for me, we have no trade at the moment. AMD, I've always loved AMD. Let's talk about what AMD is doing. It's hugging right along the 200-day moving average, but you can see the 20-day and the 50-day is below the 200-day moving average. That meant that, had been in this kind of downtrend here. But what I like about AMD right now, it has sort of that W pattern. You can see right here as I'm lining it out, W, which is typically a more bullish pattern. If the stock can move above the middle edge of the middle of the W, it should keep going. You can see here is that the 20 days starting to upslope now. The 50-day has curled upwards. The 200-day is still going. And the price action right here, this is the price action, is above all the moving averages. So that gives me confidence that AMD is really, really trying hard to get that bullish movement. I like how you can see how the price movement's been sloping upwards here. I'm leaning more bullish towards AMD, especially as it's sitting right here on the 200-day moving average. So I'd lean more bullish than not on AMD if you're looking to potentially get into a trade on AMD. I may start to look for some trades on AMD in the near future. Apple, once again, here was a congestion pattern that we drew a little while ago. It's still kind of in that congestion pattern. So let's remove these for now. Nothing's guaranteed. Nothing's always going to work 100% of the time. But what I'm seeing right now for Apple is just kind of in this congestion area. But what we do see is that you can see it's kind of in the uptrend. We can draw some of a, I don't know, everything's not always exact, but here's that ascending triangle again, where it's moving upwards, 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 but it has trouble getting through this area. So it's either going to keep moving upwards and eventually blast through, or it'll falter if there's some kind of major news out there that causes everything to go down. But for the most part, we know Apple in the long run is going to keep going up. So I think just give it some more time. It will. I think this was the all-time high here. So eventually, it's going to break its all-time new highs. Amazon, kind of sideways, but it does have this upwards movement here. Amazon, okay, nothing really going on there. Let's talk about Netflix. We've looked at Netflix before in this channel here, but it has wide ranges. Netflix can be a volatile stock. We have a position on Netflix right now. We sold a put option credit spread. It's more of a bullishly oriented trade. That's what we do, but it's still moving upwards. You can see it's upward sloping. Within, volatile activity, it still has the movement upwards. So we're still bullish on Netflix, hoping to take profits on this trade in the near future. You can see how it kind of hugs along the 20-day moving average right here, and it stays within the uptrending channel. All these visuals help you get a gauge of where the stock may go and what the next move may be. Cisco, looking strong. We have a put sell on Cisco right now, working out for us in the uptrend. In the channel, moving pretty good. It's hitting some highs here of late. It was in the downtrend and then it turned and started to go in the uptrend. So you have to play these movements now. If it pulls back to the bottom edge of the channel, you have to use that as a gauge of that's the next area of your better timing patterns when it pulls back to a portion of the channel where you want to get long. Okay, so Cisco's looking strong. Looking to take profits on that trade soon that we have. Procter & Gamble, nothing there. Walmart, just straight up. Walmart, great company, hugging along the 20-day moving average. Use these moving averages as your guide. Disney was in this, look at this downtrend. Went from $123 down to $80, almost lost about $40 a share, but sort of starting to get its mojo. You can see here's where we are now, starting to get the upwards movement. Hopefully it won't falter down. This is more of a wait and see mode for me because it's still a little sideways, but starting to make its move. So we keep an eye on Disney for potential bullish action in the future. Tesla, everyone's favorite for some reason, they had their big robo-taxi event the other day. Didn't go over so well. Gapped. Here's the big air pocket right here. That's where a gap is. It was making new highs. Well, it was getting up to some good levels here in the low to mid 260s, and then it just kind of crapped out over the last 10 days or 2 weeks or so, back down to where it broke out of you can see this congestion pattern right here, broke out to the upside, and now it's pulled back almost all the way to the breakout area. So Tesla's always a hard one for me. I can't get a gauge on Tesla. It's just too hard. Lilly, just an upsloping stock, very expensive. Bristol Myers, we've talked about Bristol Myers before. We drew the ascending triangle pattern, was moving up sideways, had the flat top, was trying to get through, and then it finally blasted through it. What I like about BMY here is that it blasted through and it's pulling back now. Had a good blast, pulling back to the 20-day bottom edge of the channel. You got the 50-day down here. If it starts to meet up with the 20-day moving average, right around maybe $51.51 a share, and starts to bounce again, that is your timing pattern, your higher probability pattern, that if you want to get long on Bristol Myers, this would be the area to start nibbling on some shares, seeing if it's going to pop up for the next move higher. Pfizer, I keep talking about Pfizer. It just can't get its mojo on. I've done what's called the poor man's covered call on Pfizer, meaning I bought some very long-term, deep in the money call options that have high deltas that act just like a stock does, but it costs a lot less. And I've sold shorter dated out of the money call options on it to help finance the long-term purchase of the call that I bought. But it just can't seem to get out of its own way. It starts to pop and then it pulls back a little bit. It's frustrating. So it's sideways action there in Pfizer, just waiting for that thing to finally move higher. Merck, okay, we've talked about Merck before. This was a downtrending stock. So I highlighted Merck. It's in the downtrend. I drew this pattern probably a few weeks ago. It's got the downtrending move, the flat bottom here, which is, if it blasts through the support, it was going to keep going. So we said I would not be taking any bullish trades on Merck because it's showing me it's in a downtrend, showing me that it was about to probably break down to even more lows for this move. So do not take any bullish trades on Merck right now. It's not in any kind of uptrend. It's in a downtrend. You don't want to try to step up and be a hero and try to pick bottoms. It will end badly for you. So Merck, downtrend still. Verizon, not much there. Costco, we had the ascending triangle here. It was getting ready to blast up, and then I think it had its earnings recently. It got knocked back down, but it's still hugging along the 50-day moving average. Costco's a great company. It won't be held down for long. I can just see this thing starting to move up again as the bulls come out of the woodwork on Costco. Actually, we just took a trade on Costco too. I forgot about that. We sold some put option credit spreads on Costco. So we're waiting for that thing to get its legs and start to move back higher again. McDonald's, strong stock. Pepsi, sideways, not much happening. Once you start looking at these charts, it only takes you a couple seconds to see what the next move may be. Here's Warren Buffett's Berkshire Hathaway. I've talked about this before. I may be starting to use this more of a proxy for the market than the S&P 500 because it's a fund. It's got a lot of stocks in it, and it just keeps moving higher and higher. You cannot bet against Warren Buffett. If you want to follow or piggyback someone, you might as well piggyback Warren Buffett. Here's the Berkshire Hathaway. It just keeps going up. If we go back to our website real quick, you go to the services tab and you click on shop. I wrote a pretty long ebook on how to piggyback Warren Buffett using a certain options trading strategy. The secret to buying Warren Buffett's for pennies on the dollar. Take a look if you wish, but following him is really not a bad thing. If you know nothing about investing, just follow Warren Buffett. He won't lead you wrong. What else we got? Meta. Pretty strong, was in this long channel here, finally broke out to the upside. It's got the 20-day moving average as support. Meta probably going to keep making more new all-time highs. IBM, strong. See how it just kind of hugs along the 20-day moving average. Google, so let's look at Google. This is pretty interesting. Was in the downtrend. Okay, we were waiting for something to happen. It finally popped out of the downtrend, but it's got the convergence right here. All three moving average, 200-day, 50-day, and then your 20-day, all kind of hanging around here. Google's holding on for dear life right here at support. If the market could get things going next week, Google should probably start to make that next jump higher, but it's right at an inflection point here. So you want to keep an eye on it for the next couple days, probably before jumping in. Clorox, not much there. Colgate, kind of here. We talked about Colgate before. Look how Colgate just kind of went along the 20-day and 50-day moving average until just recently. It finally fell below the 50-day moving average, dropped down. You can see how the 20-day is now fallen below the 50-day moving average. This to me is, for now, the bull market on Colgate has ended. For now. It'll probably go up in the long run, but for now, it's in a new downtrend. You can draw the line here. Okay, once you get a few weeks or a month or so of a move, then you can start drawing the lines. It's in a downtrend. So for now, I would be more apt to playing the downside if that's what you want on Colgate until it starts to break out and start moving higher again. It could be a short-term pullback, but you never know. But this was a case where you follow along the moving averages and now something's turned. What else? CocaCola. CocaCola had the congestion pattern. I thought it would keep going to the upside, but now it's fallen down below. So the bulls are on defensive here. If you're going to be playing Coca-Cola for the long side, you may want to wait until it starts to get its mojo back and start going up again. Otherwise, you'd be frustrating yourself waiting, because Coke could come down some more. So you don't want to step in before the next bear move happens. So I'm on a wait and see mode for Coca-Cola, Johnson & Johnson, nothing, GlaxoSmithKline, not much there. Possible, I don't know. I have to keep an eye on that one. Here's one, Adobe. Adobe's been frustrating. I thought it was ready to go. And not all the patterns work 100% of the time. Ascending pattern was looking to go higher, and then it had its earnings, and then it just crapped out. So right now, Adobe is not looking like an incredibly strong stock yet at the moment. The bears are more in control. So that's Adobe. What else we have? Nvidia. Nvidia, everyone still loves Nvidia. Once again, here's the congestion pattern. Now it popped to the upside. It was hovering right around the moving averages, right at the apex of the congestion, and then it went to the upside. Usually these congestion patterns will eventually break out from where it was coming prior. So it was going upwards, started to get some congestion, and finally it kept moving in that same direction. All right, so Nvidia looking strong. Hormel, Kraft Heinz, nothing there. SMCI, that was kind of a dud after a while. MicroStrategy. Looks like all-time new highs for that stock. Well, let's just check the long-term chart for MicroStrategy. Oh, okay, the all-time highs. This was way back in 2000, so it's got a little room to go, but looks pretty good. All right, so that's it for the stock chart analysis. Just remember, you got to flip through the charts. You got to see what's out there. You got to see which way the stocks are trending, what the moving averages are doing, support, resistance, chart patterns, all that. It will help you. Don't go in blindly. Don't just trade options without looking at the charts. Okay. I hope this has been helpful for you. Down in the description below the video are other links and books and scanners and things that could help you up your trading game. Take a look at all those things down there. Give me a thumbs up, give me a like, leave me a comment, send me an email. I'm going to put another video on the screen here for you to watch if you so desire. Just learn more about options trading. All right, that's all for me today. I hope this has been helpful. Make these free videos for the trading community so we can help each other out. All right, I will see everyone in the next video. This is Lee Lowell signing off.